Hello, crypto fans. Welcome back to the channel. Welcome to today's video where we're going to be covering a couple of pieces of news that are really interesting and that I believe that you should be following. So if you haven't already, subscribe, drop a comment, and let me know what your opinion is on the news. And select that bell icon so that way you get all of the updates, notifications right to your phone. All right. So fantastic. So the Bitcoin miner sell-off trend is actually continuing, even though it's after the 2024 halving. So what does that really mean? Well, the Bitcoin miner net position change actually showed that it is not selling in 2024. So they analyzed the data from Glassnode, and the miner net position has a predominantly shown red bars. And all of that shows that is a persistent trend of miners offloading their holdings, right? So the selling has started to decline since April. So that way the selling is getting a little bit less. So selling pressure is a big deal in influencing the Bitcoin price, right? So now it's oscillated between around $50,000 to $70,000 since April of this year. So the ongoing trend is to stark contrast in the past 5 years. So the period of net accumulation often actually went along with price rallies like the buildup that we've seen back in 2020 and 2021 during that bull run. But because of the selling is so consistent by the miners in 24, it shows a possible reaction to increased prices ahead of the halving that was followed by the post-halving market conditions. So there we have the reduced block rewards that actually may make the miners completely liquidate their portions of their reserves to cover operational costs, right? Your electricity bills, equipment. But the ongoing trend is actually very important for market participants to pay attention to, right? So as it actually can show a downward pressure on Bitcoin's price if the selling continues. So that's a big thing. So everybody's kind of wondering right now, like, what's happening to the price? What's going on? Well, this could actually influence that as well. The next piece, right? So Binance was hit with an $86 million fine because they didn't follow tax compliance in India. So that's pretty major, right? $86 million fine. That's massive. So okay, so what's happening? So the exchange has been slammed with a notice from the India's dictatorial general, so the GST, intelligence and the DGGI 2 months after paying a $2 million fine for the final intelligence unit, the FIU. The notice demands over $80 million for crypto trading platform for Binance to pay for the tax compliance issues. So they're getting hit pretty hard. The Ahmedabad department of the DGGI gave a notice to Binance last week showing their payment of the RS7 2020 core. That's around $86 million for the GST, the goods and service tax evasion from June 17 to 2024. So pretty big deal, right? Now, Binance actually reported, and here's a quote, right? So Binance reportedly earned at least RS 4000's core from transaction fees charged to Indian customers. The company has a user base of 90 million users globally, including a substantial number of customers from India too. And detailed investigation revealed that the earnings of these fees were credited to the account of Binance Group company Nest Services Limited, based in Seychelles, a top source privy to the development said, right? So this is a quote from that person. But because of the report, or as the report says, the GGI emailed the crypto exchange group and Seychelles, the Cayman Islands, if you don't know where that's at, and Switzerland to discuss Binance's compliance with the GST regulations, but actually they haven't been answered yet. So but the trading platform appointed a legal counsel to mediate with the Indian tax authorities, making the first step towards resolving the big compliance issue. So pretty big, right? But India is also continuing their efforts with regulation, right? So under the GST tax rule, foreign providers must pay GST for the services provided to the customers within the country, especially those categorized under online information database access or retrieval, the OIDAR services, right? As a result of all of this, Binance became that first crypto firm to actually show cause notice from the DGGI. And of course, all of this is part of the country's action to tighten the oversight of rapidly growing sector and to fight against financial crime and protects interest, right? So investors' interest. But the FIU is also sent notices to 9 crypto exchanges overseas for also allegedly illegally operating within the country. Right, so it's not just them. So in January, the FIU asked the platforms to demonstrate their compliance with the regulations before they were actually removed from India. But in June, Binance paid that $2 million penalty to Indian to reestablish the operations there as well. And it was fined for providing services in the country without actually adhering to anti-money laundering, the AMLs, right? So, but I believe they will get everything handled as it should be. But nothing too major. It's just everybody's fighting crypto right now. And even in the electoral race, it's a pretty big deal, right? All right, guys, be paying attention to see if Binance is going to get in any more trouble and being paying attention to Bitcoin's price pressure from the miners, right? So that's something we'll be paying attention to. But guys, thank you for joining me in today's video and let me know your opinion about this news in the comment section below. And I will see you again next time.